Despite recent events, the small cap market continues to show fight within its race to continue to outperform any large cap sector, blue chip, mid cap. But recently, there's been some things that we need to talk about as far as the future and the outlook of the small cap market, the Russell 2000. There's a lot of political or potential economic factors that are at play. What's up, y'all, man? Welcome back. It's Ronnie G, your small cap trader, swing trader, algo trader, all of the above, giving you guys another mix of what to expect and how do we make the best move. Now, let's get into the beginning of this year where the small cap market, the Russell, broke out of one of the longest and steepest downturns in market history at the very beginning of the year. Now, you see this trend line where it broke out and it started to perform very good for the first month. Since then, we have been on a slight decline. But no worries. There's still fight left in the IWM. We just got to patiently wait it out and see what happens. But let's get into some of the gist of it, right? So, as you can see, there's certain levels and certain points of the IWM that we like to look at as far as breaking points. Breaking points meaning that once it gets past this price level, we can expect this. This is highly likely, 90% chance this is going to happen. All right, it gives us a higher chance of probability not to predict the market, because we never do that, right? But to go in, calculate a risk, and understand all the risk that's ahead of us. Also, the next move that we should make, and how can we fatten our pockets. We got to think about that. So let's get into kind of these key levels. So if we go ahead and erase kind of the downtrend right here, we're going to start looking at the level of 205, or you can look at the levels of 203. So right here, you can see where the IWM has tried to break these level pressure points. Now, it tried to break it in this downtrend, but once we broke this downtrend, we have to set a new perimeter. But we can keep the same breaking point. So around 203, I think that if we can get above this, we can see the IWM skyrocket. When I mean skyrocket, I mean we can go back and start looking at making new highs within this year. Now, we're almost half of the year. We're almost 2 quarters in of 2023. And not a lot has changed. Not a lot has changed from the fact that there is bullish sentiment. Okay? But there is a lot of greed that is still there, which is keeping the IWM afloat. Now, you see right here, these key levels of 180s and then 160s, we have a demand zone. We have right here highlighted what I think is keeping us afloat. We have not broken these levels, and time after time, all of the news that's been coming out about the recession, all the news about financial companies, tech sector making layoffs after layoffs, steep drops like we had in March, beginning of March, we're still here. So when you think about that, I still have bullish optimism. Bullish optimism is probably how other people are feeling. I think that's why the greed index is highlighted. Because usually for long-term investors, when there's a lot of greed or the market's very greedy on that index, you want to start, being fearful. But with the talks of the recession that's coming, and the Treasury yield is the yield curve is really negative right now, which is the key indicator of recession. But when you start looking at some of the big outlining factors of the talks with raising the debt ceiling, that can really help us out. And also with interest rates basically being lowered by Jay Powell. And so I think that's what's really keeping up the long-term investors. For us, small cap, what do you call swing traders or position traders, we're not long-term, but we also have to think about how this affects the market that we trade. which is why I'm not talking about the SPY, or I'm not talking about Qs. I'm not talking about the Dow, because historically, the IWM has basically outperformed these markets as far as returns, which is a key indication for us small cap swing traders, more of a short term investors. Our point of view is we're going to take advantage of some of this indecisiveness with the market, but we don't want too much indecisiveness because it makes the markets boring, right? When there's no clear rally or there's no clear downturn. For a moment, the Bears were just having a blast. They were killing it. I mean, back after back, just shorting stocks, making millions and millions. But now those Bears, they're hiding in the caves. They're underground waiting because they see that the winter is coming for them. But for us, it's a brighter day. So how I look at it right now, and kind of my viewpoint of the market, is that we're going to get past some of these pain points. Now, we have some of the key points from Reuters, right? Like I told you, the main U.S. indexes, they're in negative territory. NASDAQ, I mean, tech sector has just getting blown away. They just got blasted. But when you look at crypto, when you look at the regional bank sectors, those are some other negative outputs as well. Materials are weakening. Energy continues to lead, obviously, with a lot of trade wars still going on in the political sector. But let's look at some other avenues, right, that we can talk about. All right, because now we're talking about the AI generation. All right, there's been a burst of energy, kind of like the dot-com boom, where we have these AI companies and AI technology really presenting themselves as key factors in the consumer area now. Now consumers are able to afford AI products, and it's leading the technology of a new realm of things, right? Now, there's a lot of negativity around AI, right? You think about jobs being taken, okay? I think we're still further than what people think, but you know what happens to people that listen to the media. They depend on the media to really point them in the right direction when they should do more research. We're far from that. There is a lot of AI advancements as far as these software technologies that you can use to take out some of the mitigating tasks or the tasks that are just, it's tedious. Things that, like, drafting up a email or scheduling and things like that, and keeping up with time and creating marketing material and content material. If you're, in those sectors, now you can use AI to do a lot of these things, including ads. Coca-Cola just had one of the biggest ads using AI generation. And so I think that's where we're at as far as the software. But when it comes to the real world factory jobs, yes, there's AIs and stuff being used, but we're still a long way from, I think, a decade out from really jobs being impacted heavily, where some of the small tasks are just, you can't get a job anymore. You got to learn AI, and I think that's also what's keeping us afloat. We just found out that NVDA NVIDIA is now $1 trillion company, along with Microsoft, Alphabet, Apple. That's amazing. But that's some of the things in the small sector where we have different AI companies, but we're not close to a bubble. The bubble's not popping, but there is a lot of activity that's keeping us really afloat. When you think about new home sales jumping up, things like that, those are still some positives that we can look at. Now, you talk about China, talk about BRICS and what they're doing over there as far as trying to weaken in the U.S. dollar. And you think about some of the hurdles in the industry as far as chip and, some of those chip manufacturers and even the transportation of those chips between different countries, especially when countries are at war and there's a blockage and deals being made. But that gives the U.S. kind of this base point of where we can start building these things ourselves, having jobs, and keeping them from being overseas, especially with these nations going to war with each other. And when you have allies being tangled because of, conflict of interest when it comes to business, when it comes to keeping your country afloat, I think we have something there that can help the small cap market really survive with all the things that are going on with political talks, the recession, and then, with, some of the political avenues that we have to overcome, elections coming up. That's going to be something that is a hurdle. And the U.S. debt ceiling talks, I think we'll come to a deal. But if a deal doesn't happen, be prepared to become a short trader. But if deals are on the table and they actually get done, Kevin McCarthy, Joe Biden are supposed to be talking all week to come up with a deal to where they raise the debt ceiling, if it hasn't already been made. But regardless, we can start seeing some great avenues happen with many different sectors. Now, I want to point out the positive of all that rambling about politics and, global issues. Those are important factors to look at when you think about trading or before you jump into any type of investment. But let's talk about a positive. Now, in the beginning, I told you that the NASDAQ was just obliterated because these tech sectors are being laid off. These tech sectors are also tied into smaller regional banks, SVB, First Republic. Those banks went down. But let's look at the positive of tech. The past 3 months, we've seen tech increase. The half year, technology is up 24%. And you look at 3 months, 1 month, it's turning around. It is absolutely turning around. And you got to notice that early in the game, that it's above its minimum threshold. Like I told you, in October, September, you can see right here, it was just getting blasted. But now it's above water again. It's breathing. And we can start really looking at how that affects the small cap market. With those banks that went under, they're being bought out by some of the bigger banks. Now, is that good for the lower class? The poor? No, it's not. But it helps keep the economy afloat for now. How can we take advantage of that? Start looking at some of these sectors. Start paying attention to the technology region, communication services, things like that deal in ties with technology. This is good for us. Take advantage. Even if you are doing options, start looking at tech companies. Start taking some of those options, some of those calls instead of doing puts. And like I said, with the greed index being so high for the market, some people are having to switch their position or pull back a little bit and be on hands. Because when you look at the IWM, it's still in consolidation. We have not blown past our demand zone of what it's done recently before its big spike in 2020. Now we're looking at a next 7-year bull run, just like we had in 2009 after the real estate crash, the real estate bubble. So there's a lot of upside. It's just really how you look at the market. Now, if you look at the market with the glass half empty, then you're probably a long-term investor right now. But if you're a small cap trader, you have to look at it half full because there's so many opportunities. We just have to wait on it and be able to capitalize. So right now, you don't see anything on my watch list. But I'm building this watch list. I'm seeing what's going on and how these companies and small cap companies are reacting to some of the blue chip indexes and sectors. Paying attention. Because remember, the IWM moves way faster than any other index. And it usually has outperformed all these other indexes. Now, is it the safest index? No. There's more risk, but usually there's more reward. And so that's why you see the IWM is not really outperforming some of the blue chip indexes like the SPY and the Qs. But over time, just wait on it. You see this consolidation right here. I think if we can get past this 190s price point of the IWM, you'll start to see a lot of these companies just pop up. You'll start to see a lot of supernovas, 50%, 100% plays in a day or a week. And that's what we miss as small cap swing traders. We like that momentum. It's easy to capitalize on it. But you got to stay ahead of the game. You got to keep doing the research and paying attention to these sectors and seeing how they're moving. Paying attention to the index, seeing how it's moving day to day. Paying attention to the headlines and understanding what's going on behind the headlines and reading into it. But I think as we get closer to, a positive event of, the debt ceiling being raised, we start to see these technology companies rebound, start to, maybe rehire. If AI does not make that big of an impact so quickly, I think we'll start to see the small cap market come and blast off again. But until then, I'm on the watch. That's my sentiment of the market. As volume continues to decrease, as it drops, that gives me positive sentiment that, there's not a lot of selling movement happening regardless. And so when there's not a lot of sellers and there's more buyers, we know the price is going to go up. So keep on the watch, y'all. Make sure you guys follow me on all channels. My link tree will be in the description. Follow me on YouTube. Go ahead and subscribe. Go ahead and click that notification button as well too. Every time I post a video. I know I've been slacking these past few weeks, but just got back from a beautiful trip from Dubai. That was amazing. Follow my Instagram if you want to see kind of what. I don't think I have my Instagram on here, but I'll put it on there. You guys follow and see kind of what I've done on that trip. I will be back in the Discord as well too. You guys just tap in there and we'll start talking about, kind of the day to day. And if you want to learn, like I said, subscribe to that YouTube channel, join the community right here, and see y'all guys next week.